4 things that you need to avoid when applying or when you have already applied for that mortgage. Hey, good morning, guys. How you doing? This is James Crim, your neighborhood realtor here, and I'm just enjoying this morning walk right now in Ocoee. I'm at beautiful Strake Lake right now, and I want to go over 4 things that you need to avoid when applying or when you have already applied for that mortgage. I have more on the list, so I'm thinking about maybe doing a part 2, maybe a part 3, but we'll go ahead and see. So let's go ahead and get into it. Before we begin, I'd like to thank everyone who has liked, shared, commented, subscribed to the channel. It really helps and motivates me, and it continues to help me to know exactly what it is that you guys like so I can continue to put out that information. The first thing you want to avoid when applying for a mortgage is buying a vehicle. And I believe that this is important either before applying for a mortgage or even during the mortgage approval process. Okay, many people believe that home ownership is out of reach for them, and a lot of times it is because of, let's say, a vehicle or high debt. Your debt to income ratio is a big factor when it comes to being approved for a loan. And what so many people do is even before they go ahead and apply, they may go and buy that really expensive car, and now they have very high monthly payments. I believe the average new vehicle payment is around, I want to say between $500 and $700, right? And 16% of people actually have a car payment of $1,000 plus a month, right? So that's really, if you're trying to buy a home and you have a five, six, $700 a month payment, it's really going to affect if you can be approved for a mortgage, and B, how much mortgage can you actually afford to as well. So make sure that you are not applying, and just wait until after you actually get the home to go ahead and get that car. Second thing to avoid when applying for a mortgage is using your credit cards excessively. Right? A lot of times people like to go and buy things and purchase things on their cards, and sometimes they leave a balance on those cards. And when you're applying for your mortgage, the way in which they estimate, at least based off of the credit cards that you use, they go off of that minimum payment that you have to make on your card, right? So if, let's say that you're applying for a mortgage, or if you have applied, you have approved, and you start using your credit cards, once they go ahead and, because just because you go ahead and you get pre-qualified, pre-approved, doesn't mean that they're not going to be checking your credit again once you actually go ahead and purchase a house. So let's say, for example, that your credit card was perfectly fine when you applied, but during the home, you found your home, and during that time you started to use your credit cards. Now your minimum payments, because you have a higher balance, your minimum payments are going to go up, and that means that your debt to income ratio goes up, which means that you will be in jeopardy to either fall out of the mortgage that you have, or you're not going to be able to afford the amount that was currently stated. So make sure that you're not using those credit cards excessively, and if you can, try to pay them off or bring them as close to zero as possible. Good morning. How you doing? The third thing to avoid when applying for a mortgage is spending the money that you have set aside for closing. You want to make sure that you have money set aside for that big closing day. And usually you may have it sitting there until you are ready to go ahead and actually close. So you don't want to go ahead and get tempted to spend that money, and then now you don't have a way to recover it, and you don't have the money for closing. With closing, just make sure that you have that money set aside, and if you need to, if you're someone that may be tempted, if you're seeing it in your account, why don't you just put it somewhere that you're not going to be able to see it, or maybe a little bit, you may have to go through a little bit more hoops in order for you to get access to it, so that you're not tempted. You just got to know who you are, how you are, what type of financial behaviors that you have, And if you're someone that likes to spend money, put parameters around so that you're not, so it's not easy and less tempting for you to be able to use that money, because you just don't want to be at, go through this whole process and you're ready to close and move into your new dream home, and now you don't have the money. The fourth thing to avoid when applying for a mortgage is to make any late payments. All right, this is very important, especially on your credit report. You do not want to have any late payments uh, when during that application process, when you're in it, especially because payment history counts for about 35% of your actual credit score. So one missed late payment can have a really bad effect on your credit score, and it could stay there for a while. So you want to make sure that you're doing your best to pay on time. So know the dates that you have. Sorry, there's a squirrel right there. Know the dates that your payments are due. Um, I'm guessing if you're someone that is applying for a mortgage currently, or has that, I mean, your credit should be in good standing right now, but you want to make sure that nothing happens to it. That should take priority over other bills, especially if you're in that process of getting into that home. Okay, so make sure that you are paying your bills on time, and that is reflecting, either whatever bills that there may be is reflecting on your credit report. Guys, late payments can affect your ability to get approved or affect your credit for over a year. All right, so it usually takes about 12 months for one late payment to kind of have less of an effect than it did before you actually had that late payment. So it's very important, if anything, is to make those payments on time. All right, guys, so there you have it. The four things to avoid when applying for a mortgage. So, buying a vehicle, using credit cards excessively, spending money you set aside for closing, and of course, don't make any late payments. My name is James. I hope that you like this. Please like, share, and subscribe. Let's go ahead and have a conversation. If you want to hear more things, just let me know, and I'll definitely make a part two. Please subscribe, guys. It helps to motivate me, and it helps for you guys to get up-to-date information of what's going on here in the Central Florida area. All right, take care.